All right. Let's see. Time to do another company. Are you ready?
Yep.
Okay. Let's talk about PVH. And you said that was Calvin Klein and who?
Tommy Hilfiger.
Tommy Hilfiger, that's who it was, yeah. They are in the apparel manufacturing industry. The shares on the float getting a little bit high at 8.7, so I'm wondering why that is. People thinking that the stock is going to drop. We do have a good PE ratio of 11.5 versus 22.4. Again, the name is PVH, but the symbol is the same, PVH as well. I want to make sure you catch that there. Price of sales, very good, 0.4 versus 1.3. Price to book value 0.7 versus 3.3. We do see price of cash flow also good, 6.6 versus 12.7. PEG ratio, another good thing, 1 versus 8.1. So the valuations on this company look very, very good. We do see, unfortunately, and maybe Chase will answer this, but the earnings per share for the last year were down 46.4% when the industry was up 21.5%. We do see sales did climb by 0.5%, not nearly as good as the industry, up 5.7%. However, analysts going ahead for 5 years on the earnings say they see earnings growing per year at 7.2%, and that's above the industry at 5%. Now, they do pay a dividend. I'm not sure why. It's 0.2%. They use 2.3% of their earnings paid out. Why even bother? I mean, I don't get why companies do that. It's not worth it. It's pennies on the dollar. We do see on the balance sheet, current ratio 1.5 versus 1.9. Debt to equity 0.9 versus 1.1. Net profit margin 3.9 versus 5.9. That's kind of okay. Return on equity 7 versus 23.7. That's not very good. Free cash flow $442 million a year versus $725 million a year for the industry. I mean, I'm seeing things, except for the valuation ratios, I'm saying, it's okay. I guess we're going to see what we got going forward on the growth there.
There's a current price for PVH Corp. Their ticker symbol, very easy. PVH, well, it's $75.27 here. 52-week range, the low, $59.28, and the high, $111.71. Over the last year, the stock is down almost 30%. Over the last 5 years, it's down about 18%. And your 10-year return, nothing to write home about, a 6% gain over a 10-year period.
Wow. And actually, well, that's kind of strange because I have the dividends. I show a 10-year return of a negative 1.3%.
That is interesting.
1.3% decline or 6% gain. Neither one's very good over 10 years, so let's not argue about that. I guess. It's bad.
Well, going forward for the company, I mean, this is where things are intriguing. You go out to January 2027, I see estimated earnings per share here, $11.98. I mean, it gives you a target sell price of $198.87. So the valuations are attractive on the business. We did look at this earlier this year, and I kind of want to take a look at it again. We looked at it earlier in the year after they were added to the unreliable entities list in China. That really caused the stock to take a huge hit.
Oh, because they get a lot of products from China.
Well, it looks like I was trying to find some numbers here. I mean, China only accounted for about 6% of their sales, but it accounted for about 16% of profits. And this looks like in fiscal 2023. I didn't have time to obviously dive into it. This is just based off what Google's showing me. And production's about 18% in China in fiscal 2023. So, again, China is a part of their business. But with the improving China relationship between here and the United States, that, hey, maybe things would have recovered, but it seems like they are having other issues as well. Looks like I had some disappointing guidance this past week as that caused the stock to tumble 10% again. So, I mean, the company has some issues going even outside of China, maybe with that brand or their brands, I should say, with Calvin Klein and Tommy Hilfiger. But here's the interesting thing I always look at with apparel is we've had success in the past with, I'm going to say, two different retail companies, two different brands. They were purse companies, not kind of these types of businesses, but same concept. Two different ones over the last 8 years. Retail can be very hard because it goes in and out of favor. So those stocks can be volatile.
Yeah.
But if you can pick it up on a downturn, you can make good money in this space as long as that brand comes back in a favor. But I even look at like a American Eagle and Abercrombie and Fitch. I mean, they were out of favor for a while, and now they're hot again. I mean, that's the hard part with retail. It's very fickle. You don't want to buy when I think everything's going great because that trend can turn, and then all of a sudden the stock does. But when things are out of favor, I mean, I'm not going to say I'm going to run out and buy PVH tomorrow, but I think there is some level of intrigue there.
And you got some good names there, Tommy Hilfiger and Calvin Klein, I think you said it was. I looked at the balance sheet again. The debt to equity is only 0.9, so this is one thing I want to be careful. They don't have a lot of debt through these down periods that could hurt them. And also, too, there seems to be a China issue there as well in the manufacturing. That will eventually somehow play out and be gone. Either the manufacturer somewhere else or the thing with China will come to the table and we'll deal with that. So there could be some potential I'm hearing as well for this company. I don't think I have anything from Calvin Klein or Tommy Hilfiger.
I just don't like clothes.
Well, you wear them.
I do wear. Yeah, I'm not a nudist or anything. I just
You don't like brand name clothes.
yeah,
You just,
I'm good with just
and you got some nice suits and nice shirts and stuff, but it's just like you're not like, oh, look at I got a
designer.
Calvin Klein
I'm not a designer
yeah,
guy.
Yeah. I got the designer suits that are in my own name. I like those. All right, so I guess should we put that as a potential watch for PVH?
Yeah, I mean, I think it's definitely intriguing.
Okay, all right.